Hi guys, this is Trader Zenith, and we're going to be going over the momentum breakout strategy that can allow you to capture 1000% movers, such as this one, that happened just today. And to get right into it, what are we going to cover? We're going to be looking at scanning, the setup itself, risk management, daily practices that you can do to improve, and traders to study further. So starting off with the strategy, we're going to be focusing on intraday trading. So it's going to be the time frames of 1 minute or 5 minutes. And then for the actual stocks, what are we going to be trading? So to scan for them using TradingView, you can open up its screener, the stock screener, and all you really need is this pre-market change. So you can go over here, add pre-market change percent. So I already actually have that. And then what you would want to do is sort by descending. So what we're trying to do is trade the most active stocks, the biggest momentum stocks. So what are these? These are stocks that have gapped up, usually at least 50% or around 50%, as you can see here. And then using these pre-market or at market open, you would try and get a list of the biggest gappers and you would be watching them. So taking CYN for example. So with this CYN, let's move on to the actual setup. So let's just delete this here. What are we actually looking for? Our strategy is really a simple flag breakout strategy. For an illustration, it's really just big move up, orderly consolidation, and then a breakout from that level. And you would want to be buying the stock when it breaks out. So how does this drawing actually translate onto the chart? So what we're looking for really is a big move up, as stated before. We've got that right here. It's went from around $21 to $28 a share. Then what we have next with the drawing, that orderly pullback and consolidation. We have that right here. If you want to draw a trend line, something like that. And then what we want to do is buy it when it's breaking out. Where is that? Right here. So ideally, we would be buying the breakout right here. To dissect that a little bit further, what we have here is a stock that has broken far above pre-market highs, pulled back, but it's been on this consistent uptrend. What we want to do is just follow that trend. We have up, pullback, up, pullback, up, pullback, up. We're looking for that pullback. Ideally, we want to see higher volume on the green candles, lower volume on the red bars. We do have a failed sort of breakout here. That's okay. What we want to be doing is waiting for that tight consolidation and then buying right when it breaks above that range. And then on to step 3 of what we're looking for, risk management. How do you manage your risk in this trade? So what we're obviously doing first, we have to buy the stock. Then for our stop loss, where would we want to put it? Where is a logical level that we would want to get stopped out where we accept that this trade just hasn't gone our way? So 2 most common ways to do it would be the low of the breakout candle or the low of the consolidation. If you do the lows of the breakout candles, you have a tighter stop, but the thing is sometimes these come back down to fake you out as seen here. And so if you have it at the lows of the consolidation, you might have a smaller risk to reward, but you're still capturing the meat of the move and you're trying not to get faked out. You would also want to be keeping your position size, so your stop loss, you would want it to be maximum 1% of your account. So say you have a $1,000 account, this stop loss, if you get hit, you would want to be losing maximum $10. And after that, that really is just the setup. Now, obviously, you take this flag breakout and you want to be putting in work to study how it works. So, for example, what should your target take profit be? 40%, you would have caught that move exactly. But how does that translate to every other setup, not just this stock? So that brings us to our daily practice. What do we want to be doing every single day to just take this drawing, this low-level drawing, into an actual setup, into an actual strategy that you can trade every single day? So going back to that screener, you want to be taking every single opportunity that you could have had today. You want to take all of these gappers, you want to journal them, you want to go through their chart, mark down every single area that you think there was a setup. So right here, there was a flag. Maybe down here you see another flag, you have a smaller sort of tighter consolidation. Maybe this is more of a scalp. You want to be targeting the highs of pre-market or the recent highs rather than just taking a 40% take profit as seen here. On top of that, you're going to be doing your own research. See if you can add different indicators. Say you want the 5 EMA, say it gets really tight and then it breaks out. Personally, I actually use the 5 EMA, 10 EMA, and 20 EMA. And what I've found is before breakouts, these tend to get really tight. When it's a faster moving stock, it gets tight around the 5 EMA, 10 EMA. When it's a little bit slower, or maybe when it's about to fail, it's taken too long in consolidation, it gets tight around the 5, 10, and 20. When they start to slope down, that's obviously different sort of scenario here, but we've been trying to do with this strategy is just to capture that trend, right? It's just following this trend, this uptrend. We're trying to ride it as best as possible, but getting a good entry, which is this breakout strategy. Again, this is just a technical analysis pattern. What we want to do is just try and study every single instance, every single day. You want to see what could have led this move to happen and how could you have captured it. So an example from what I've done, we have uptrend, higher volume green bars than red bars, tight consolidation around the EMAs. What else do we have? Risk, risk, stop loss, low of consolidation versus low of bar. How often does this fake out versus just breakout and go? So using these questions every single day, we want to be doing that analysis. How can we give ourselves our own criteria? And to add even more to your study, how can you learn from others to better this setup? What can they show you that you might not have noticed? So an example of some of these traders are Govardhan, Gajjala, who actually trades this exact same strategy on the 5-minute time frame. He trades these momentum breakouts with tight, orderly flags, and then he buys the breakouts. Another one, Timothy Sykes. He necessarily might not have the exact same framework, but you can always learn from these traders. Another one to learn from is Qullamaggie. He trades these setups on the daily time frame rather than the intraday. So what he's looking for is a strong stock that, say, this would be like over a few months. It has daily consolidation over a few weeks, and then it breaks out. But what can we learn from that? It's the same exact patterns. It's exactly the same price action. You're just getting it on a shorter time frame, more momentum. And last few, we have Ross Cameron, or Warrior Trading. He likes to trade these ones pre-market. So if we go through this, if you wake up early enough or you're in a good time zone, you could have been trading these flags. So an example, one there. There's just so many, really, one there. There's a lot more opportunities if you have time or if you're available. But again, you have to be studying these every day. You have to be putting in the work and seeing what works and what doesn't. And again, that really is it. That's all I have for you guys today, the end. What I want you to take away from this really is just to keep on studying every single day. You want to pull up these movers on your own charts. You want to annotate them. You want to see, how is this stock moving? How would I be able to capture a move like this, 40% in a day? The reason we're doing intraday trading, there's always most likely going to be opportunities. You don't have to wait these couple weeks or months. You don't have to wait necessarily for the market to get hot. There are usually always at least one 50% gamper. Sometimes these fade, sometimes these don't go up, but when they do, you can make a trade that would give you a lot of money, and that's really what you're kind of here for. That's why you're watching this video. So again, that's it. That's my full momentum breakout strategy. Make sure you study these setups, journal every day, and stay consistent. Let me know in the comments whenever you see setups or if you want me to go through other sorts of strategies. And again, thank you so much for watching. Make sure to leave a like and subscribe.